And the trading day is underway here on this Thursday, May 21st. We saw stock futures under some pressure and the Dow starting the day off 40 points. Let's bring in Darrell Cronk now. He is president of the Wells Fargo Investment Institute. Darrell, good to see you here again. I'd love to know from your vantage point, are you seeing any technicals in the market right now that show you that investors' appetite for risk is starting to improve a little bit?
Yeah, actually, we're at really key technical levels here, Alexis. Last night, we closed just above the 2965 on the S&P. That was a key level, which actually looks a little bit bullish. If we were to cross the 3,000 200-day moving average, there's nothing but blue sky between 3,000 and probably 3,200 on a technical standpoint. So these next couple days, albeit low volume likely with Memorial Day coming, do matter for the market technically where we are. If we fail into today and fall back, then we failed into resistance in a recession, and we're still stuck in this range between the 50-day and the 200-day.
Darrell, the move in the Nasdaq it's amazed me. I'm sure it's amazed a lot of investors. Do you think we're due for a short-term breather and we've reached peak Nasdaq?
I don't know that we've reached peak Nasdaq, but I would agree with you, Brian. The move has been eye-popping. I think we're up 21, 22% now on a rolling 12-month basis, which is almost unheard of. Certainly the online platforms continue to show strong top-line growth and good bottom-line growth. I was looking even last night. So if you take technology and communication services, it's now 35% of the S&P, which exceeds, going back into the 1999, 2000 levels of tech telecom. So we are getting, we think, a little bit frothy here. We're due for a pullback. We wouldn't be surprised to see that. The economic data needs to continue to improve from here. I think interesting this morning on continuing claims, while they were lower than the previous week, they're not improving at the level we want to see them improve. Losing 2.4 million jobs is still a lot of jobs on initial claims. So we do need to see the data improve. We need to see good news continuing to hit the market, we think, for it to set new highs and keep advancing.
Okay, Darrell, so if things are getting a little frothy in the market right now, what are you doing with your portfolio? I mean, what are you overweight? What are you underweight?
So we're still actually overweight in the portfolio, fixed income, mainly credit. So we're taking advantage of the credit spreads as things have tightened. We're a little bit underweight equities. Our risk budgets are down right now below, right around 90% of our long-term strategic weightings. So we have a little bit of a more conservative position here sitting at these levels, Alexis. We think that makes sense here. We've just run a long ways. This has been a historic V-shaped recovery for the equity markets, even though we don't anticipate the economy to experience a V-shaped recovery.
What about outside of U.S. equities right now? How do you view small cap stocks, but also how do you view emerging markets? Are you playing in there at all?
No, we're actually unfavorable small caps and unfavorable emerging markets right now. We still think you have to favor the U.S. over international. And in particular, we want to be up in quality in large and mid cap and down in quality on small cap. Small cap continues even year to date to underperform the S&P by 1,100 basis points as of this morning. So smalls, they struggle when the economy is still where it is. Unemployment rises. They typically have more leverage on the balance sheet, which is not an advantage in a recessionary period. So we expect weaker and more timid earnings growth out of the small caps.
Darrell, what's your expectations for summer trading? Typically, volume dries up in the markets as everybody goes on vacation, but we're all still working from home, and those vacations may not happen. How do you think that will influence markets?
Yeah, I think it's an excellent point, Brian. You may actually see a more normal summer to the spring and the fall type activity because people aren't going away. They're not traveling where they are. So I would actually expect volumes to stay relatively consistent through the summer months and not tail off like they normally do. That could actually be an advantage for markets because you don't get, typically when volume dries up, you get these extreme moves in markets. Small amounts of either news or sentiment can push markets too far on either direction. So I'd actually be happy if volume maintained through the summer. I think it's a critical time as we experience the reopening, as we look at high frequency economic data to judge whether, the reopening is taking a hold in a good form or not.
What do you see as the next big catalyst for this market? Is it, a new stimulus package from Congress? Is it news of a vaccine, which, we see how bumpy that road can be. The market sort of reacting to any headline we get on a possible vaccine, which is still months, if not more than a year away. To your mind, what is the next big catalyst?
I'm not sure there's exactly one, but I would give you a couple, and I think you named some of them there, Alexis. You've got, we do think you need to have fiscal and monetary action continue. So the degree to which Congress continues to step up here and meet extensions of unemployment claims and kind of filling that gap. Fed Chair Powell has been out recently in a number of speeches talking about his concern about the economic recovery and where the economy stands. Certainly the reopen and the vaccine path are very important to the market, maybe arguably the most important elements to the market. The high frequency data we think matters, so you got to keep your eyes and fingers on the pulse of the high frequency data. And then even though we've suspended almost a third of the S&P's earnings guidance, earnings estimates, consensus estimates are still too high for 2021. They need to get reined in and come down, in our opinion. So markets will have to deal with that as we advance through the summer months and the second quarter earnings season.
I'd like to check in with Jared Blickery now for what's happening here in the markets in the early going. Jared, what are you keeping an eye on?
Well, just looking at the broader markets, Dow is just up nominally. And, we're talking about liquidity and coming into the summer months here between May and Labor Day. They have that old saying, sell in May and go away. Are we going to see that happen this time around? Also talking about the seasonality when we have these steep declines followed by a rebound going into the summer. Not only in 2008 and 2001, but also with respect to going back to 2010, just coming off of the crisis. In May, we had the flash crash, and we do have lower liquidity. And to Darrell's point, that does exacerbate the price movements that we see. So just taking a look at one of our heat maps here, we can see the Nasdaq, kind of a mixed picture. Most of the FANG stocks in the green. Facebook at record highs here. Sorting by performance, we can see Ross Stores up 8%, followed by United Airlines and American. Those are up about 3% and 2% respectively. To the downside, Expedia down 2% after reporting earnings, followed by analog devices down about 2%. And then looking at the sectors, we have energy again in the lead. We have crude oil with a 33 or 34 handle in the July contract. Also looking at industrials, Boeing is leading in the Dow up about 3%. Communication services being boosted by Facebook. That's about 17% of that entire sector. To the downside, we have healthcare, staples, and utilities. So kind of defensive there. Financials are lagging. We've seen them struggle a lot over this entire crisis, and they have been rebounding a little bit. Nice to see the KRE, the regional bank index, bouncing back, but under a little bit of pressure today, Alexis.
Darrell, would love to get your take on the FANG stocks right now. Seem to be holding up pretty well. You just saw Jared talking about Facebook. What's your feeling on those stocks right now? Are they a little too frothy at the moment?
I actually think they are a little bit too frothy. They obviously are where growth resides right now, and that's important. But they've come so far and are now, as it's been well documented, 21% of the S&P 500, which exceeds the March 2000 prior peak of the top 5 stocks. Interestingly enough, if you take the top 5 market cap stocks, they make up the exact same market cap as the bottom 360 stocks in the S&P 500. So that's a phenomenal skew that's happening. We like the, call it, intermediate to long-term fundamentals. We just think that they're getting to be somewhat crowded at this point, Alexis.
All right, Darrell Cronk, president of the Wells Fargo Investment Institute. Good to see you. Thanks for being with us.
My pleasure.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.